Hello everyone, and welcome to today's video where we'll be discussing some of the best undervalued dividend stocks to buy. Undervalued dividend stocks are those that are trading at a lower price than their actual value, which makes them attractive to investors who are looking for opportunities to buy stocks at a discount. In addition to the potential for capital appreciation, undervalued dividend stocks also offer investors the added benefit of receiving regular dividend payments. Undervalued companies aren't necessarily the biggest ones out there. They could also be mid-cap or small-cap companies or even growth-oriented companies that trade for less than their peers. When looking for undervalued dividend stocks to invest in, investors typically look for companies with a solid track record of paying dividends, a sustainable dividend payout ratio, and a strong financial position. Investors should also pay attention to factors such as the company's industry trends, competitive landscape, and growth prospects. So in this video, we'll discuss each stock's dividend yield, dividend payout ratio, and long-term potential, as well as any potential risks associated with investing in these stocks. By the end of this video, you'll have a better understanding of which undervalued dividend stocks to buy in 2023. So before we start, kindly like, subscribe and comment to stay updated on our future uploads. 1. Mercado Libre, MELI. One of the top most undervalued stocks to buy is Mercado Libre. Mercado Libre, MELI, is a Latin American e-commerce company that operates in 18 countries throughout Latin America and the Caribbean. It provides services to merchants, buyers, and other users. With more than 370 million users, Mercado Libre is one of the leading companies in the region. The company is known for its innovative payment systems and logistic solutions. The company offers several advantages to its customers, such as fast shipping times, multiple payment methods, an easy-to-use platform, and excellent customer service. In addition, it has a strong brand presence in the region, with a solid reputation for reliability and trustworthiness. The stock continues to get more attention these days due to its increasing market share, which has brought its price higher. We would say it remains undervalued even though it isn't far from its target price after moving from $826 on Jan. 2 to $1,215 on January 27th. MELI stock is still one of few e-commerce giants providing reliable returns. 2. AT&T. AT&T Inc., NYSE, T, is one of the most established and popular telecommunications and media companies in the world. AT&T operates a diversified portfolio of telecom, media, and technology businesses, making it a reliable stock for investors looking to add some stability to their portfolios. In terms of its dividend, AT&T's annualized dividend yield currently stands at 5.77%, which is one of the highest dividends you can find among stocks with this kind of quality. The company has also been steadily increasing its dividend payout over the years. After the completion of the media division spin-off in 2022, AT&T is a leaner and more focused organization. It has also reduced debt by $25 billion in the first 9 months of 2022. With an annual free cash flow guidance of $14 billion, the company will continue to deleverage. In conclusion, AT&T is an excellent choice for investors looking to add stability and growth to their portfolios while also collecting a generous dividend yield. The company has a strong track record of dividend increases, and its P/E ratio indicates that it is still undervalued by the market. As such, we believe that AT&T is an ideal stock to buy in 2023. 3. Golar LNG, GLNG. Golar LNG is a leading provider of liquefied natural gas, LNG, shipping and floating storage and regasification units, FSRUs. The company is focused on the acquisition, ownership, operation, and chartering of LNG carriers and FSRUs. Golar LNG has a strong presence in the spot market and has recently entered the long-term charter market. Golar LNG has a market cap of $2.47 billion and is listed on both the Nasdaq Global Select Market and the Oslo Stock Exchange. The company is expected to continue to pay steady dividends in the future, which makes it an attractive dividend stock for investors looking for income. In terms of traditional value metrics, Golar LNG benefits from a very low P/E ratio of 3.48, lower than 83% of the oil and gas industry. GLNG stock is currently cheap, and it's also a reasonable hedge against volatility due to its business model. Golar LNG also has several growth catalysts that make it an attractive investment opportunity. It is expected to benefit from the increasing demand for LNG and growing global energy demand. In addition, the company has been investing in new vessels and expanding its fleet, which should result in increased revenues and profits over the long term. 4. Verizon Communications Inc. NYSE, VZ. Verizon Communications Inc. NYSE, VZ, is one of the largest telecommunications companies in the United States, offering an array of products and services including wireless, digital TV, broadband internet, and voice services. The company operates a national 5G, 4G LTE network that covers more than 99% of the U.S. population, providing its customers with excellent coverage and speeds. For investors looking for a dividend stock to buy in 2023, Verizon Communications Inc. NYSE, VZ, should be high on the list. The company has consistently paid out quarterly dividends since 1984 and has increased them each year since then. In 2021, Verizon Communications Inc. NYSE, VZ, increased its quarterly dividend by 8%, up to 62 cents per share. This puts their current yield at 6.43%, which is an attractive rate for income investors. Additionally, the stock is currently trading at a price-to-earnings ratio of 7.44, making it significantly undervalued compared to its industry peers. As of the end of the September quarter of 2022, the biggest stakeholder of Verizon Communications Inc. NYSE, VZ, was Ken Griffin's Citadel Investment Group, which owns a $200.4 million stake. 5. Chevron Corporation, NYSE, CVX. Chevron Corporation is one of the world's largest integrated oil and gas companies. With operations in more than 180 countries and over 100,000 employees, Chevron is a global leader in energy production. The company has a strong dividend history and currently pays a quarterly dividend of $1.51 per share, yielding 3.72%. Chevron has a long-term commitment to increasing its dividend payments. Since 2000, the company has increased its dividend every year with a compound annual growth rate of 8.3%. This demonstrates the company's commitment to shareholder rewards. Chevron's share price has been steadily increasing since its lows in 2020. In addition, the company has an attractive valuation. With a price-to-earnings ratio of 10.7 and a price-to-book ratio of 1.4, Chevron is trading at a discount compared to its peers. This makes it an attractive option for long-term dividend investors. Chevron reported an operating cash flow of $13.7 billion for 2022. The company plans to invest $15 to $17 billion annually over the next few years. Even after aggressive investments, the company is positioned for a free cash flow of over $20 billion. CVX stock looks attractive at a forward price-earnings ratio of 8.63. And we expect a renewed rally after some consolidation. Chevron also remains focused on reducing its carbon emissions by 20% by 2030 and becoming net zero by 2050. This means that the company is looking to reduce its environmental footprint while still providing a reliable source of dividend income to its shareholders. Overall, Chevron is a solid option for dividend investors seeking to diversify their portfolios with a reliable and sustainable dividend-paying stock. With its strong dividend track record and attractive valuation, Chevron should be considered by any investor looking for an undervalued dividend stock to buy in 2023. 6. Exxon Mobil Corporation, XOM. Exxon Mobil Corporation is a large American multinational oil and gas corporation headquartered in Irving, Texas. It is one of the world's largest publicly traded companies and is involved in every aspect of the energy industry. XOM has operations in over 50 countries and is the world's second largest company by revenue after Apple Inc. XOM has a long history of consistent dividend payments, paying out dividends since 1882. The current dividend yield is 3.29%, which makes it an attractive option for income-seeking investors. The company is also highly profitable, with a return on equity of 14%. This indicates that the company is capable of generating significant returns for its shareholders. XOM also has a strong balance sheet and financial position, with a debt-to-equity ratio of just 0.32. This suggests that the company is well positioned to continue to pay dividends to its investors in the future. In addition, XOM has a low beta of 0.55, which means it is less volatile than the broader market. This can provide investors with peace of mind when investing in XOM, as the risk associated with holding the stock is lower than other stocks in the market. Overall, XOM is an excellent choice for investors looking for an undervalued dividend stock in 2023. The company's consistent dividend payment history, high yield, strong financial position, and low beta make it a great investment opportunity. And that wraps up our video on the best undervalued dividend stocks to buy in 2023. We hope you found this information useful and informative as you navigate the stock market. Remember, investing in stocks carries risks, and it's important to conduct your own research and due diligence before making any investment decisions. With that being said, investing in undervalued dividend stocks can provide a great opportunity for long-term growth and passive income. Keep an eye on the companies we've mentioned and consider adding them to your portfolio if they fit your investment strategy. Thank you for watching, and don't forget to like and subscribe for more valuable content like this in the future.